What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 16th of 2021. Well, folks, I hope you are having a fantastic day wherever you are, and today's video is one that you're not going to want to miss, as it's going to be one of our deep dive macro videos where we take a look at where we are within the current Bitcoin cycle, talk about our forward-looking outlook, and today I want to spend some time as well to dive in a little bit as to explaining not only why I had the rationale or the idea of taking profits on the vast majority of my cryptocurrency positions back on the 11th of January. But outside of that as well, being my biggest critic and talking about why I might have gotten the call wrong. So let's go ahead, let's dive straight into it, guys. But with all these macro videos, I like to take a couple steps back to realize where we are within the current cycle. What we've seen over the last month, mainly through January and also in the later half of December, has been something that we have never seen within cryptocurrency markets, guys. Now, what I mean by this, well, if we take a look at the logarithmic chart, it's very easy. Take a look at the long-term time frame going all the way back to, in this case, July of 2010, the longest amount of history we have here to work with Bitcoin. Historically speaking, when we break past the all-time highs, it tends to be that we get a good month or two of follow-through. It's something that I think many of us probably missed when analyzing Bitcoin breaking past the all-time highs. And we can see here that we not only had really December and January as green months where we moved higher, but along with this as well, we've seen this in the past with previous cycles. We had a breakout here in May of 2017 after we solidified a breakout above the previous all-time highs in November 2013. And along with that as well, here in March of 2013, when we broke past the all-time highs of June in 2011. This historically happens in the sense of percentage returns. But one thing that hasn't happened yet, that just happened over this last month, is the sheer magnitude of market capitalization gain. Now, on a percentage basis, we've seen this, but this time around, it was different because we went from a $20,000 Bitcoin towards a $40,000 Bitcoin. And that is rather than in the previous cycles, a couple hundred millions of dollars gained in valuation or a couple tens of billions of dollars gained. This is hundreds of billions of dollars gained for Bitcoin. And I want to take a moment to just talk about how significant that is. How significant this time around is in the sense of the buy side pressure, the institutions, companies like MicroStrategy, publicly traded companies, and other corporate treasurers now coming in and putting large allocations of their cash on their balance sheet into Bitcoin. This is no longer a speculative asset, guys. You'll hear large players, large individuals say it's a speculative asset. You'll still be continuing to criticize Bitcoin, but Bitcoin is an emerging store of value. And it's extremely exciting to see that it's getting that kind of mature appreciation from a lot of the kind of larger companies and entities of the world. A lot of you out there who believe that we could get to this point now have now been proven right. And it's really exciting to see. Now, at the same time, though, this leads me towards an important topic, and that is why I decided in this case to consider taking profits here in the short term. So let's go ahead and talk about that here. Going back again to that long-term chart, I wanted to talk a bit about expanding cycles. One thing that we've discussed a lot on the channel, and there's some people who agree and disagree with this concept. Some people believe in a four-cycle theory, where you basically take the top or the bottoms of each market against the next bottom. But in this case, I like to look at bottom to top here. I mean, that's what we're looking to invest in, right? From bottom to top here, it tends to be that we add around 11 to 13 months to each cycle. So from here, starting in July of 2010, we had an 11-month cycle, bottom to top. You can see here the 11 monthly bars. We can see here as well from bottom to top here from November 11th to November 2013. We had a full flat 2 years, 24 months. Then we added another 11 months in the next cycle, so 35 months. And if we're to meet somewhere in the middle between 11 to 13, we don't know exactly how many months we're going to add in this cycle. If we keep towards history here, this would be a cycle of around 47 months if we add 12 to the previous. Now, do you notice anything about this cycle that might catch you off guard? I'm going to go ahead and just give you guys a moment to think about this. Look at these boxes here, these cycles, and what's different this time around. I have a feeling we might have talked about this on the channel. I know we did within the Dash report, but basically speaking, this is the first time we crossed the midway line on the cycle here, right? From bottom to top. Our estimation here of going towards 100K and hitting the line of resistance here on the logarithmic chart. This is the first time we crossed the midway line in the first half of the cycle. It tends to be that it's in the last quarter or the last 3 or 4 quarters here in this case for Bitcoin cycles where we actually break above this midway line and really go parabolic. This time around, we're already well above it. And again, this shows here the kind of magnitude this cycle has brought. But at the same time, it led me to be a bit cautious because Bitcoin is not going to make the same multiples it's made in previous cycles. We've seen that time and time again, and it's true with just about any market out there. That being realized, because of that, I was really starting to get worried when we were starting to top out and see some resistance around 40K. 40K was proving to be a level where there was a lot of profit taking. And when we started to get towards 38,000, I started to get a bit weary. And it wasn't just because of price, it was because of a lot of different variables that I saw across the market when it comes to the actual kind of analysis and data science that we have. So, for example, one of the major things that people have been citing as a bullish indicator for crypto was the amount of Bitcoin on exchanges depleting over time. And this trend has been building since back here in February of 2020. We've been seeing time and time again as we go throughout the halving event, and also more and more interest in Bitcoin as the price started to accumulate higher and higher. That reserve exchange Bitcoin, in this case, the amount of Bitcoin reserves on exchanges was getting depleted. And this allowed spot price to climb up a lot higher as these institutions were buying up large chunks of Bitcoin and holding it for the long term, right? And we started to see here that now, over the last couple of weeks, really over the last month and a half, things have started to turn relatively flat here. Now, some people still say that's great because it's still staying low. The problem I had here in this case is that I knew very well that this decline was not only the biggest factor driving up price, but the second thing as well is that with any sudden surge here of sell side pressure, the same effect can come into Bitcoin's price. With lower amounts of Bitcoin reserves on exchanges, this has allowed spot price to be more volatile, to leap up higher when buyers come in. But also, it can play out vice versa. It can also sell off just as quick. And we saw that back here over the last couple of days, back on the 11th and the 12th. So again, that's something that I'm still genuinely concerned about, the lower reserve amounts here for Bitcoin, how that could play out negatively. Another thing that I was watching at the time is Grayscale's holdings. So we know Grayscale's instrument GBTC, which is an exchange traded note, which a lot of people utilize to buy Bitcoin through their brokerage accounts, was continuing to play a big role in the driving price and the driving force of Bitcoin. But starting back here on the 24th of December and going towards the 11th, where I was making my analysis at the time, Grayscale had grown flat going into the holidays. There weren't any major new additions. And this was definitely meaning that we had less demand coming in for Bitcoin here. Now, again, whether there was demand or not, that buy side pressure wasn't coming through from Grayscale like it was over the last couple of months and driving Bitcoin's price higher. You can see how much this sustained support in times where there was this kind of consolidation. This would have been probably a period of sell side pressure, but institutions were coming in and sucking up all that Bitcoin, letting us get to an environment here where we could really start to climb parabolically. And with that stagnation, I got a little bit worried, right? Now we've started to see that it's climbing up a little bit here, to be fair. Outside of that as well, take a look at the fear and greed index here. We've been holding up here for months on end. You can get the chart here expanding. We were holding up here basically for multiple months in the 90-point range or above. And we finally started to get a breakdown here towards 90, where I started to get a bit concerned that we could start to pull back. And when it came to those kind of large scale purchases, right, in the market that were really driving up Bitcoin's price outside of just Grayscale acquiring more Bitcoin, we had companies like Ruffers, which was the last major story, or excuse me, Ruffer in this case, which is a large UK investment company, coming in making a large, substantial move into Bitcoin, and now bringing in these record profits here in this case. And that was really the last, major company to do anything. MicroStrategy and Ruffer were the last two ones, as well as Mass Mutual. We didn't start to see a lot of those major headlines anymore, those large purchases of Bitcoin. And last but not least here, what had me concerned was the mass amount of liquidations that happened on derivatives platforms. Over $2.5 billion worth of long positions were liquidated back on January 11th in the broader crypto market. 1.5 billion of that being Bitcoin liquidations. So, taking a step back here, when I started to see that pullback to 38,000, mid $38,000 range, I took profits on my positions, mainly in altcoins. And the important thing that I want to take a look back at is obviously, yes, Bitcoin went lower in this case. If you were, for example, taking profit on Bitcoin, then at least now you're still technically in the right here in this case. And we've seen over the last couple of days went back to 40K. We went as low as 30,000, right? a lot of people would argue that it could be a good or bad call, right? But I want to go ahead and take the critical approach in my position, guys, because there's two things that I want to mention here. First off, as I've emphasized to most people, swing trading usually isn't a profitable venture. It can be in this case. Um, overall, if you're able to time the market, probably it's a lot better than day trading. But swing trading really does take some patience. It takes a lot of in-depth analysis of the market. And for most average everyday investors in this case, or people who are not having the time to look at the charts 24/7, averaging in is usually the best position. And I advise that for most people here watching the channel, I definitely recommend people do not day trade. It's just not something that's going to help people in the long run, right? And I want to make sure more than anything, you guys are winning out in the market. But the key thing I want to talk about here, where I have been definitely proven wrong, is the fact that I was positioned in altcoins, and altcoins are doing very, very well. Now, of course, I'm marking it here as the top performers over the last 24 hours. But just scrolling down the list here, guys, altcoins are starting to hold out quite well in a market where Bitcoin is starting to go down, right? So again, a lot of these are some of the small caps, again, kind of going against a lot of preconceived notions that we had. We thought the large caps would kind of cycle up first. We did kind of see that with Ethereum, but really the things that are leading now are a lot of the small cap altcoins. And this leads me as well to not only look at dominance, which is holding up quite nicely here, holding around a little bit below 32%. We really took our profits here, our position back on the 11th when market dominance was just about a percentage point difference from where it is now. So we haven't really missed out on anything major. That's the good news. But to be fair, take a look here at FTX, right? This is the DeFi index for perpetual futures in this case. It's just basically an index for the performance of DeFi plays. And back here, where we kind of took profits around this 4,000 range, it's gone up more than 25% here. So overall, have I made any adjustments to my positions, guys? No, I haven't gone back into the market just yet. But I do have to say here that this was not what I intended to see here in the market. I thought that altcoins would initially, much like they did in the previous cycle, remain relatively neutral or possibly pull back a little bit before we started to see the pickup back in Bitcoin's price where altcoins can really surge, right? So again, this is something that has definitely thrown me off guard a bit. It's definitely not what I intended to happen in price. And above all, I think one of the best charts we can take a look at here is one that we actually added in the Dash report a while ago, which is taking a look at the total market capitalization excluding Bitcoin. In the previous rally back between, really it was really in 2016 we started to come back up in price, but we set our bottom in crypto markets as a whole back in really 2015. And what we saw here was a rise from a couple of tens of millions of dollars to $500 billion for altcoins. Now, do I think we're going to see that kind of percentage return here for Bitcoin and cryptocurrencies as a whole in the altcoin market? No, I don't think we're going to see that this time around. It's good to be a bit more conservative. But at the same time, we had this chart here, and I hadn't looked at it in a while, to be honest with you guys. And this is a chart showcasing how we might do a 10x from the previous all-time highs going to 5 trillion, right? I think that this is a completely rational, especially over a longer period of time, a completely rational target for where we can see altcoin market capitalization. Altcoins being around 5 trillion and Bitcoin going on towards, maybe being a $2 trillion or $2.5 trillion asset. It would leave us in this case for altcoin dominance at around 66% or Bitcoin dominance being around 33%. I think it's completely rational to see this. And what I think I had lost sight of in this case is even if we got, right, that 20, 30, 40% pullback in altcoins where we could add in on those dips, it's really not worth the risk in this case of missing out on the grand scheme of things, right? So I think that that's the important thing to keep in mind. This is why averaging in for most people tends to be the best thing, right? I haven't lost out on, months worth of profits. I've been in the market and stuff, so I don't feel like I've really missed out on anything. But at the same time, I want to be self-critical in that case and realize that, maybe it really should be good here in this case just to, on those dips, average in and not really worry too much about our time preferences in the short term. Because we're here going into 2021 and to 2022. I'm actually more in it for the long term in this case, as I believe in cryptocurrencies, but in the sense of investment for this cycle, I think that we're going to go well into 2022. Sorry, guys, I really think it's going to be longer than many people are expecting, but that's good because it means we have a longer time preference on the logarithmic chart. Therefore, we can set higher levels on Bitcoin. And also, I think that we have a chance at reaching much higher valuation ranges in this cycle than some people do. All right. Now, for those of you who might be curious to keep up as to whether or not I'm going to be, getting back in the market or not, you can follow me over on Twitter. Usually, we only send alerts out to the Dash report, which will be down below in the description if you guys want to sign up. It's a great way to support the channel. I do a deep dive into other types of markets, but you can also follow me at Nicholas_Merton. And outside of that as well, just one thing that I wanted to share with you guys as you are starting to maybe plan out building your cryptocurrency portfolios for the long term, always consider as well that there are different ways you can go about investing in cryptocurrency markets. And one of those is through a cryptocurrency IRA. One of our sponsor partners here in the channel, iTrust Capital, made a really good article here detailing the benefits here of setting up a crypto IRA. They offer crypto IRA services, but they have this really good article here that talks about not only the tax savings, so you can defer your taxes towards a later date, when you're actually going into retirement, so your income bracket is at a lower rate, and therefore you pay a lower rate of taxes in the United States. But along with that as well, being able to diversify yourself into a wide range of different cryptocurrency assets, as well as other non-crypto assets like gold and silver, and also as well, just not having to deal with the hassle and the stress of dealing with, again, having to do taxes every single year on your investments. It can be a great benefit of an IRA. So if you guys want to, I highly recommend you read the article here and give iTrust Capital a chance if you think it's an interesting platform, you think it might suit your needs. But above all, everyone, I just want to say thank you all for the continued love and support and the patience as well during this time. It's been a bit hectic getting ready to move and get settled in here in Europe. But I've got a lot of exciting things coming for you guys, a big announcement and upgrade to the channel that I think you're going to like in the next couple of days. So anyways, I'll see you all in the next video. Have a great day, everyone, and take care.